Hello everyone and welcome to today's market analysis videos with me, Rich Perry, market analyst at Hantec Markets on Tuesday 29th of August. We've had a big explosion of safe haven trading flows into safe haven assets such as gold, the yen, also US treasuries, and that's come on the back of reports that there was a ballistic missile that went over the top of Japan fired from North Korea, and that has significantly sort of ramped up the geopolitical concerns once again, and it's a big safe haven drive on the back of that. Let me show you how the markets are looking this morning. The dollar is subsequently under pressure, but the dollar was already under pressure following on from Friday and Yellen's speech at Jackson Hole, in which she didn't really didn't talk or focus on monetary policy or balance sheet reduction, and the market took that as dollar negative, and subsequently we've seen the dollar under pressure since then. But looking at the euro above 120, wow, I'll show you on the chart analysis, that is the highest it's been since January 2015. Sterling dollar gaining ground again. The yen is a big outperformer today, 0.6% down on dollar yen, and also you can see here that the that the commodity currencies, which are the riskier end of the scale, they're under pressure as well. So we're seeing dollar weakness, commodity currency weakness move into safe haven plays like the yen and also the Swissy today. But also look at gold. Gold over 1% higher, $14 up on the day, 1,323. That is significantly broken out again through a big resistance area, and I'll show you that on the chart analysis. This is a big move on gold, big outlook changing move. So that's very interesting. Let me show you the dollar move. Continuing this downtrend channel at levels not seen since, wow, we are testing that spike low of May 2016. That spike low is 91.91. We're actually below that, and has actually broken that, so that's interesting. So you sort of move back. That is a massive top area potentially on a technical basis. Jeez Louise. Yeah, looking at that, you've got volatility which is spiking higher, clearly the market under pressure with the equity markets strongly lower. We're seeing treasury yields which are topping out. Look at that 10-year. The low on that was 21.10, basically testing that low as we speak, on that June 2017 low. Interesting that we're seeing the 2-year, which is lower but not anywhere near as under pressure as the 10-year, and that sort of 2-10 spread continues to fall away, now back at levels not seen since sort of August really. So it's a 12-month low on that 2-10 spread. And yeah, some really interesting moves. S&P 500 didn't really react, or hasn't had a chance to react, I should say, yet. But I can imagine that's going to be sharply lower as once more the rally gets sold into. Lower highs, lower lows forming on the Wall Street markets, and that is yeah. These markets are under pressure. So interesting moves, not across the board. Now, in terms of what we got to look forward to today, not a huge amount. Bit of housing data. Where am I looking? Bit of housing data of the States. The Case-Shiller house price index expected to be 5.7, so no change there. Consumer confidence in the States remains very high, 120.30. That remains very high, but still the markets are going to be reacting more to this safe haven flow today. Now, my chart today is euro yen. Very important moves on euro and also the yen today, but very interesting to see that the initial selling pressure that we saw in euro yen has completely turned around. The market's actually trading around about the highs of the day on euro yen. Really interesting turnaround intraday. And look at these momentum indicators. RSI back above 60. MACD lines, that's the important one I think here. Crossing back higher again. Bull cross. It's the last time we saw that in June when we burst higher and carried on running. So really strong move to the upside. Looks like we're going to be testing the top of this range. A breakout above 131.40, which is this resistance that we saw in early August. That is that would be another strong breakout, a similar sort of consolidation range to what we saw in May, June, and that continued to go, didn't it? Really continued to go. You could arguably measure that consolidation range 131.40. It's around about sort of 400 ticks, isn't it? 400 pips of upside. So could really go to the next level, to the upside. 132 area is the next resistance. That's from Q1 2016, but 135 area would be the sort of implied breakout if we saw a move out above 131.40 on a closing basis. Strong momentum across the board, looks good. So market is reacting strongly after the initial move lower. Found support. Let me just zoom out. Found support on this sort of old pivot, 129.60 to 130 area. Big support band now, I would say. 130 figure. Bit of a pivot. And, yeah, I think it's looking good. So the market is positioning, I think, for a big test of that 131.40, possibly further out upside in due course on a closing breakout. So I wish you good luck in your trading today, and I will speak to you later. Thank you.